The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the German DAX and also the FTSE like we usually do. As you can see, they opened sharply lower and had a little bit of a rally. That's when we were down 100, almost 100 S&P points early this morning. But that reversed, and we were only down about 50 right now. I'll go into that in just a minute, but I did want to point this out that they did bounce off those bottoms. As you can see, they've come down quite a bit from their highs. We're going to have Shane Smolian as our guest here at the 9:20 break, 9:17. He's going to talk to us about the COV 19. He keeps good stats on that, and frankly, I trust his stats more than anybody out there, folks. We've been watching his stuff for a long time, and he's had a handle on this, and it's certainly worth looking at. So we'll pay attention to it because it appears that the news that is out there is relating to what's going on with the COV, and we'll see what's going to happen with it. They're going to maybe try to shut the country down again. Well, whether they do or not, we'll have to wait and see. Okay, let's get on to something that we'll have to chat about just a little bit. Tucson, we supposedly, in Arizona, we supposedly kicked up. We haven't seen anything yet in Tucson, but, really don't know. They've stopped playing poker here. We had a little bit of a segregated poker with the plastic between the things and wearing gloves and masks, and the old timers raised my hand, Larry. We didn't particularly like that. I didn't go down and play at all. I basically, we haven't really done very much other than go to the market. We've been out to eat, maybe 3 times in 3 months, so not much is, really happening. Let me explain to you what the problem in the world is, folks. If you remember last week, we were being hit here with fires here in Tucson. Let me bring this fire up. I want to show you the fire here so you can see it. This was, I believe, as of Wednesday. This is the fire behind my house. Now, that's about 4 miles away. It looks like it's really close. The mountains are around 7,000 feet. This is about halfway up the mountain, and that's in a canyon back in there. There's not any houses, but there was a lot of smoke for several days, and they were talking about it, and we started watching it in the news, and it was in the national news. My sister even called me worrying about me, and I said, well, we don't really see anything other than the smoke, and the smoke isn't, quite that bad yet. So Saturday morning, when they were still talking about evacuations on Friday. So Saturday morning, when we usually do our shopping, Sarah said, let's drive up the mountain and see if we can see anything. I said, well, I don't even know if we can get up there with all the trucks and stuff. So instead of going down the hill, we went up the hill, and we were up about 2,000 feet higher, and we got the Skyline Drive, which is about 2 miles due north into the mountain. And from there, you can see the city absolutely. You can see Mexico from there, and there were no fire trucks, there were no fires, there was no fire line. You could see the red retardant that they had dropped a few days earlier at the top of the mountain, but there was nothing there. So we drove all the way across Skyline, which is about 8 miles, and started to go down the hill. We didn't see anything, nothing burning, no smoke or anything. This is just 2 days later. So we finally go to the market, which is about 10 miles away on the backside of the mountain. And folks, this was such BS. I couldn't believe it. It was unbelievable. There was one fire truck. It was there was no danger. Nobody got hurt. There were a few old homes destroyed, old cabins that were up there, but there was nothing other than that. So, boy, when you see stuff I actually couldn't believe it when I saw it, but, well, that's the way it goes. So neither here nor there. All right, let's move on here to couple things I wanted to get to before we get to Shane here. I wanted to show you Bitcoin, folks. We're in a little bit of a correction here. This is a really important correction that we're seeing in Bitcoin. We've had that massive triple top up there. You can see from way back in November, just a massive triple top at 10,400. Now we're starting to back off. You can see the little butterfly pattern that happened at 10,400, and now we're just going. See, we haven't collapsed from there. That's the really good part. We haven't gone up, but we certainly haven't collapsed. So want to pay attention to that. Very good support at 8,000 in the Bitcoin. We'll see whether that happens or not, but that's neither here nor there. All right, let's move on to the market the way I see it, and I don't know whether you see it the way I do it or not, but here is something that we talk about in the newsletter each week, and that is the standard deviations. This is the S&P cash. Oh, this happens to be the mini futures. They look exactly the same. You see these blue lines up here? The first one was one standard deviation down. That's, if you look at a bell-shaped curve, the first standard deviation is at about 75%. The second standard deviation is about 90%. And you notice that price down there at 29.80, second standard deviation. And we went through that, folks. And you know that the low that we made last night was down there at 29.20. Now, the reason why that is important, and let me show you why. If you like Fibonacci numbers and you follow Fibonacci numbers, sometimes they work, sometimes they don't work. But what you got to do is to raise your money and take your choice. Here was the opening here on Sunday night. Let's just get this up here. You'll see that we opened sharply lower. We went all the way down to 29.70. We rallied up to 29.97, which is a 382 retracement of the high from Friday, late Friday, and that's where we stayed for quite some time. Now, what I'm going to do is try to follow down the road here just to show you what happened, during that time, because that's what, makes these things work. And sometimes they work better than they would like to, but let's just get up here and just take a look at this one right here. I want to show you right here. Here's the next one. After we failed, now look, this is what happened last night when we got down to that 29.20. The 29.20 completed, this is just a 4-minute chart because we're watching it closely. You can see it completes a perfect ABCD at a 1.618 expansion at 29.20, and then we start to rally. You notice the first rally should be at 29.55. Well, we went through 29.55. Well, that's important. Does that mean that it's failed? Yes, it does. It does mean that it's failed. But what you have to take in consideration is the fact that when it did that, look what it did in the overall context of looking at what the market did from the previous day. You made the big ABCD pattern, and then you went up and made the second 382 retracement. The first one came in at 29.97. The second one came in at 29.80. What this means is we're heading down until we get above, 3,000. If we get above 3,000, then we've got a chance to rally. Until that happens, that is not going to happen. And below 29.20, boys and girls, the number that you're looking at is 28.40. So that's why that's important. That's my 2 cents worth, and I'm sticking to it. Hope that helps. We'll have Shane Smolian on to talk to us about the COV outbreak and what it's doing, and we'll go from there. And I wanted to bring one other chart about the volatility up here in just a second so I can show you where it is, and it's right here. Give me a second, and there we go. Here we get this up here, and then we'll be back right after the break here with Mr. Shane, and he will be talking to us about the COV virus and also the solar eclipse cycle that we're dealing in right now, which comes in on 21st in 6 more days. July 21st, June 21st, 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have Shane Smolian on the air. Shane, are you there?
Good morning, Larry. Can you hear me?
Very good. You happen to be in charge of our infectious disease segment here at TFNN, so could you give us a rough idea of what's happening with the COV? You've been pretty much spot on from the last 3 months. So what are you seeing right now? Is this a new outbreak?
Well, let's start with the global cases here because that's the most important thing to track because you get these local outbreaks throughout the world. So first of all, the global cases here, as you can see on the chart, we are approaching 8 million cases right now. We're at 7.9 cases this morning. And the trend has essentially following a linear path right now. It had some times where it looked like it might be leveling out, but it's essentially still climbing. And I think what happens is, in some cases, the cases are falling. In other places, they're rising. So you're just getting like this kind of tug of war and you're getting this steady rise in the global cases. So I haven't seen any turn. There's a couple times here, like right here on the graph, where it kind of looked like it was going to flatten, but it didn't. And of course, this is to be expected because people are coming back to, going back to work, and the economy is opening back up. So people are being exposed to each other on a close basis. So that's the global picture. I track that every day, and I'm going to focus next on some localized outbreaks here. So there's a couple of states that are hotspots. So right now, Texas is one of them. Now, this is the number of new cases. So Texas had 1,843 cases yesterday, new cases. So you can see that that's actually a rise even from the peak of the COVID right here. This was back in April, which we had supposedly that peak. In New York, they're experiencing that. But we're still rising. So that's definitely something to look at. this needs to flatten at some point. Even when people are coming back to work, at some point when the immunity kicks in, it has to flatten. So if this keeps rising, that's something to watch, because if it starts going exponential, then there could be a risk of another shutdown. But I don't know if the government would do that. But that's Texas. So the next graph that I want to talk about is Florida. So this is where I live, and you can see this one is much more pronounced. The number of new cases are above 2,000 now, 2,016 cases. This is as of yesterday, and this is still just kind of going exponential here. Now, the thing is, there's many different ways to look at this. So there's number of new cases, there's mortalities, and then there's hospitalizations. And supposedly, and at least where I live in South Florida, the hospitalizations are low, but in Texas, they're very high. The ICU rate is like 75 to 80% of capacity. So it really varies from state to state. But the number of new cases are surging here in Florida. Now, that's a recent phenomenon. But other states, like if you look at California, which is going to be the next slide here, they've just had a steady increase. So they've just been kind of, you could not even tell here where the economy opened back up or where the flattening was. It just looks like a steady increase here, because like back in Florida, you could see that, okay, here's where they opened the economy, it spiked. This one is just a steady rise. So there's no flattening going on in these states. So this is something that we should be concerned about down the road. And we know that this is a coronavirus, and we know how coronaviruses behave. There's many people, for people who don't know, this is just a certain strain of a coronavirus. The coronavirus has been around for years. If you look on the back of your Lysol can, it will say kills coronavirus. And we know that these come back in the cold weather months. So this is probably going to have a second wave reemerge at some point. So just keep watching these statistics. This is a statistic that I put here, which is interesting. This is the U.S. home purchases. So one good thing here about the economy is that we did see that dip into March and April in the home purchases, but now it seems to have rebounded and came right back to the pre-COVID levels. So that's a good sign. We definitely want to see that. And also the Uber drivers, if you track the Apple the GPS maps, everybody's starting to come back online. The one industry that is completely lagging right now is airlines. Airlines are very slow to recover from this COVID. So, and that's to be expected, because it's a close quarter industry, obviously, when you're sitting on an airplane. Okay, this next graph here, this is the Spanish flu pandemic. So this just shows that there were multiple waves of this flu in 1918 and 1919. So the first wave came in July here, and then the second wave was the most devastating wave here. This was in October, November, and then there was another third wave here in January, February, of 1919. So obviously it's a different case now. We're able to work from home. We're able to, we have better medicine. We have better communication. So, I mean, I don't know if this will play out exactly as it is here, but this is just something to look at, that these pandemics do roll in waves. And I've been tracking this coronavirus transit that I put in the newsletter, and that is it's making multiple passes back. It's making another pass back in August, and then another pass back at the end of November. So, we got to watch that, because it seems like the cases are increasing. And then, of course, we would expect the cold weather months to be hard too. So I don't think this is going away anytime soon. And if we use the past as a model of, as a history, as a model of past history as a model, then we can see that probably it's going to be around. I don't know if the government's going to shut down again, but the cases are on the rise. So
makes good sense to me. Yep.
I got another slide here. Go ahead, Larry.
I was just thinking, do you think this is going to be as bad as the Spanish flu?
Well, the mortality rates, it depends how you look at the mortality rates. I think the Spanish flu, the mortality rates were never really that high. It's just it hit so many people. I find it very curious when you look at different countries. There's different mortality rates. Like in London and in Great Britain, it's like 14%. It's high. In other places, it's like 3%. And I remember when Great Britain first got it, they were still getting on the tube every day. They were still crowding in on all the subways. I remember that like very clearly. Like they were not heeding the warnings. So I wonder if that had something to do with it. I do wonder if there are different strains. Like I feel like the people in New York, I know that they live close and they're on top of each other, but that northern area, it seems like it was just a stronger outbreak up there. And the people that I know from Florida that got COVID and died, okay, I know a few people that died. They had traveled to New York and came back. So I mean, I can't. I mean, that's just speculation, but I do feel like, it's hard to say. I mean, it varies. Iran got hit very hard when the virus came out, very hard. Even their leaders were getting it. Congress was getting the Parliament was getting it. So it's hard to say. I mean, but I will say this, that just because you don't die doesn't mean it can't mess you up. I mean, I know somebody who got the flu, is a doctor, and he got really messed up, just almost died. So.
Hey, we'll be right back, folks.
Sure.
877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, Shane, before we move on to the next segment, we have a question about the airline stocks. Specifically, United Airlines got hit really bad, and now Hertz is going bankrupt and is trading for, I guess, under $2 a share now. Do you have any feeling on either one of those industries or stocks as far as the cycles present themselves?
I haven't looked at the airlines specifically, but I will say that Hertz is in a bad position because of the competition with Uber, and the airlines really, they don't have much competition. I mean, they're still going to have to fly. I mean, I think the airlines are going to get more bailouts than something like Hertz would. So Hertz is definitely in a much worse position than airlines. But
Okay.
I can comment on that next time. I just haven't really looked specifically at the airlines. Those are just my initial thoughts, though. People have to
Okay.
fly. They have to fly.
Okay, what would you like to do next? The solar eclipse?
Sure.
That'll be on Sunday. And when do the effects of it? Well, I'll let you go ahead. Why don't you do it, and then we'll ask questions later. Go ahead, my friend.
Sure. Just one more thing about Corona. In Beijing, there was an outbreak, and they shut down a market. So, there's definitely signs of a second wave here coming. So, we talked about the lunar eclipse before. This is a chart of the lunar eclipse that just happened, and the idea of the lunar eclipse is with the S&P is that the lunar eclipse the effects tend to happen after the lunar eclipse, and we did get that decline in the market. There's also, you got to look at the planetary speed index. This is making an important low for the year, okay? So if I say that for the year, so we're at a low right now, and the next low comes in November. So it's not at all surprising that we did see a decline. The magnitude of it was rather strong, but we are at some type of a low in that. So with the eclipse and the planetary speed index, we could be looking at some type of a low. And this is just a side-by-side graph of the last lunar eclipse. So I put this out before for subscribers. This is on the left side. This is called an efficiency test. And this goes back and looks at the eclipse. This is day 0. This is the lunar eclipse here. And then on the left side, -1 means like one day before, 0 is the day, +1, +2, +3. And then on the right side, this is the actual S&P 500. And you can see that it traced it out very well. It started rising about a day before on the left, a day before on the right. Day 0 is here. Day 0 is here. It went up for one more day after the lunar eclipse. You can see here, it went up for one more day, and then it started falling. And it fell +2 here, +2 here, and then +3. And then, of course, on this fourth day, the efficiency chart did not show that day as the biggest decline, but it still showed it as going down, and it fell. So these efficiency tests, they test singular transits only, and I really don't like to do that too much. I look at the planetary speed, which is multiple planets, but in the case of an eclipse, eclipses are important events. It's like a super new moon or a super full moon. Everything is lined up perfectly, so it tends to have more pronounced effects. So we can study these statistically through time and just see how they do. And that the market came right back to that 200-day moving average on that lunar eclipse. And then of course we have a solar eclipse coming up, and then another lunar eclipse coming up around July the 4th. So let's talk about solar eclipses now. So that was the lunar eclipses. So solar eclipses, they have different meanings for different things. So the S&P might behave differently than gold, and gold might behave differently than corn, et cetera, et cetera. So you really have to look at each market independently. Okay, so these transits are specific for each market. So for the S&P, the solar eclipses tend to be very friendly events. They're bullish. In fact, on each side of the eclipse, you tend to see an advancing market. So that, if you go back through history, solar eclipses are positive, while lunar eclipses are negative. But if you look at gold, for example, gold does not like solar eclipses. Just like gold does not like it when Mars goes retrograde. Mars is going to go retrograde in a couple of months. So gold has its own behaviors for the solar eclipse. So gold tends to top and tends to do these dome-type tops, like a V-shaped top, inverted V-shaped top. And S&P tends to go up before and tends to go up after. And corn, I just threw this one in here. This one just tends to decline rapidly into the eclipse, and then it might just go flat or it might bounce, but it tends to fall. So, each market is different. The eclipse coming up follows a similar path to the lunar eclipse, but it makes a much more a much more focused path because the moon is a smaller object. So it's going to be passing over Africa, Saudi Arabia, Pakistan, and China. Okay, and these are going to be the people that are going to feel it the most. Now, it's a much more friendly setup. It doesn't have the same. Even if you look at the planetary picture, it's not as brutal as the lunar. The lunar eclipse, of course, lined up with the signature of war and outbreaks, and we've been seeing this with the riots. So the lunar eclipse really picked that up. The solar eclipse doesn't. It's more of a friendly picture. So these are some graphs now. So this is the solar eclipses from 2019 to 2020, and you can see that before and after. Before it's going up, and these red lines here, by the way, these are the eclipses here. These red lines. So each time you see a red line shoot up like this, that's an eclipse. And the peak of the line is just how intense the eclipse is, how much of the sun is covered by the moon. That's what that represents. And then the black is the S&P. So before this, here in 2019, it's going up, and then it continues to go up here. Before the eclipse here, it's going up. After, it kind of went sideways. And then this one here, it went up, and then it continued to go up also after that eclipse. So that's the general pattern of these. Now, we're dealing with probabilities, so of course they don't all work all the time. I mean, you do have failures, you do have markets that will top in a solar eclipse or that just won't follow the behavior. But if you look at the behavior across time, that's the general behavior. So this is an example of 2013 to 2014. In this case, if you go back to the 2013 over here on the left, it went up before and then it just went kind of flat after. It actually went down a little bit. This one here in November went up before, up after. This one here in April and May went up before, up after. This one, I guess you could say it was going up a little bit. It's kind of coming up at the bottom, but it continued to go up after also. So this is the signature. This is the friendliness of the solar eclipse. And again, you got to look at the picture that the planets are making during the eclipse, but this eclipse is way more friendly, definitely, than the lunar.
Wow, that's really great stuff.
This is 2012, 2013. There's some more. These tended to make more of a V-shaped bottom. So this was falling before and rising after in 2011. And then in December, it fell, and then it bounced. In May, it was falling, and it went kind of sideways. And then in 2012, in November, it fell, and then it bounced. So it made like this another V bottom. So sometimes it can fall before, but the net effect after tends to be positive. So that's definitely something to watch.
Wow, that's really good stuff. Listen, my friend, we're going to have you back on again really soon. Thank you so much for the COVID update. And please, if you see something that you need to bring to our attention, we're here to, let you give us your soapbox, because you've been spot on these things. And frankly, we ought to, tip our hats to you, because you've really done a great job. One final question is, what's your feeling on the S&P, up or down from here?
Up, 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 up.
Okay, we'll be right back, folks. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I did post a chart of United Airlines, and you can see here that it had a 382 retracement and then quite a healthy sell-off. Whether that continues or not, we'll have to wait and see. But like Shane said, the airlines are not going to go away. They're just probably going to be consolidated. Here's one that we were looking at overnight, and that was the gold market. We had this beautiful ABCD pattern coming in there at 17.18. We bought it and had a nice rally up to 17.27, and then it came right back down and went through it again. So we put our stop as close to break even as we possibly could on that after starting with an $8 profit. Folks, when you're trading gold, you're trading something that has a margin of it's around $5,000 for the margin, but the value of the contract is worth $172,000. That's a heck of a lot of money. So that when you get that type of leverage, you've got to be really careful. Now, the other way of doing it is to trade the GLD, which is the ETF for gold, which is quite good. So that's another one that looks, relatively interesting to pay attention to. Okay, get back to the U.S. dollar here, folks. The U.S. dollar has had some type of support come in. Let me post this up here for you, and you'll be able to see it. We've been waiting to see if that support was going to hold, and so far it has, but just marginally. It hasn't really done very much. Now, remember, folks, look at the volatility that we have here in this U.S. dollar index. We went from 94.50 all the way up to 104. We had a 10% run in that puppy, and it did it in 10 days. And look what happens. It takes 3 months for it to come down, to below 78% of that. So this is a very, very wild market that we're seeing. The rally that we had on Friday only went to the 382 retracement, so it's still basically in a downtrend. The euro is held up. It's still trading below the 113 level, and it still looks like it could go lower. Another one, of course, is let's just get this up here so you can take a quick look at it. If I saved it, and I did, is the British pound. And of course, they're having problems in the British pound. They're actually rioting in British pound about what's happening over here. They've defaced the statues of Winston Churchill and Gandhi. That's what's be the thing of the day, is to destroy statues. Folks, when you start destroying the history of the country, you're in big trouble, because that's what we're based on. Doesn't make any difference whether you're right or wrong. If you believe in something and you stick by it and you're willing to die like they were during the Civil War. Remember, there were 800,000 casualties in the Civil War, folks. That's the equivalent of 8 million people. today. I mean, that's you can imagine what that would be like. So, well, anyway, that's it. I have no feelings either way. I have a strong affinity for the South because of the long time that I spent in Vicksburg with Jay down there when he was buying the bed and breakfast inn, and every morning we would go to the military war park and see all the statues. And it was a battlefield. You could literally in Vicksburg back in those days, in the Battle of Vicksburg, you could be on the hills overlooking the battle, and you could actually watch the red and gray fighting. It was just really incredible. They have a history of all that stuff. But anyway, that's neither here nor there. We'll move on to something else. Let's just check and see how the markets are doing so far this morning. We do have a downward bias, folks. If the S&P does not get above the we're in the September now. If it doesn't get above the 30 level, we're trading at 29.72 right now. We don't get above that. That tells us that we're most probably heading lower. Now, for those of you that follow some of these ratios, we just recently we just hit a 382 retracement in the E-mini NASDAQ that came in at 95.52. We're now trading at 95.16. So if the NASDAQ can get above 95.60, it's already had a 200-point rally, folks, since the middle of the night. I mean, we got as low as 93.50, so we rallied up to 95.50. So it rallied 200 points, and we're still in a bear market. So we're getting volatility, like we've not seen before. But you've got to be able to protect yourself here when you're watching these things, because the problem is, these things can run away. As you can see what happened with the Dow down on Thursday, 1,800 points. I think that was about the largest down move we've ever had, if I'm not mistaken, in points. It wasn't, of course, by percentage, because that was only, I think, 6.7%, whereas on the crash day of 1987, that was down 16%. And yet, when you look at it on the long-term charts, it doesn't even come up. I mean, it's not even a factor. So that tells you the volatility changes as the wind blows by. So pay attention to it. The other one that we're watching very closely here, folks, let's get this up here so that I think we can see it pretty easy, and that is, just get this up here. We're almost ready to take a look at it. Ooh, we almost made it. Shut the front door and raise the rent. Just give me a second here. We are very, very close to what we like to see, and that is, we're not quite there yet. We're just off by a little bit. Let's move this up here. Sorry, folks, I'm trying to get this up so you can see it really clearly, because these things are a little sensitive sometimes. This is going to be the gold market. Here's what we're watching here. The 61% retracement on this is a 4-hour chart, so these are the last 3 days coming down, 5 days since the 11th. And you'll notice that we are very close. We're within $6. That comes in at 17.04. So the low so far has been 17.06. We're trading at 17.10. And if you follow Fibonacci numbers, you know that you must wait until the actual number gets there, because when they're accurate, they're that accurate. And when they're wrong, they're wrong. Let's just do one other thing for the boys and girls today, just to keep everything really interesting. We'll just bring up and show you what we're looking at as far as what the AI is looking at for today, just for some fun, for kicks and giggles. And we'll see here that we do have a bottom forming at around 10:30. From 10:30 for the rest of the day, it looks like it could be positive. So if I were to give any advice, and I'm not giving any, if you pay 2 cents worth, you've already paid too much. But watch that time frame of 10:30, because if we're making a bottom down there, boy, that's a beautiful 3 drive to a bottom pattern right at a time that should be critical. And the price at 17.05, 17.04. Shut the front door and raise the rent. Those are the kind you really like to see. That's the main thing. By the way, we're going to have David Paul later in the week talk to us about Vector Vest, because it did such a great job getting in and out of these markets. And then I believe on the 18th, we will have Norman Winsky as our guest. And on the 19th, we have my sister's birthday. I want everybody to send their cards and letters to my sister Carla, who will be 75 years old, believe it or not. How did she ever get that old, that little girl? All right, folks, here we go. We've got the gold trading at 17.09. We're looking at 17.04. Whether it gets there or not is in the hand of the trading gods, but we'll let those gods decide how we're going to do that. See if we have another question in the room here. here. The light is off. Let's see. Someone's asking a question here. David is asking a question. Can gold go a lot lower? Absolutely, gold can go a lot lower, folks, for several different reasons. One is we have that really strong seasonality where June and July are the very worst months to be long gold. And you really want to buy it in August, September, October. So we have that real strong season. We brought that to our attention by Bill Cerubi, if you remember from trading cycles. Anyway, he brought that cycle to us, but that's a seasonal, and sometimes seasonal work and sometimes they don't, but they're worthy of it, especially when the charts are telling you that. And silver is broken down below its support, and the last support in silver comes in at 1681. And let's see where we are here in the silver.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we'll end up the show here by highlighting these numbers that we're talking about. One is the S&P September. If we get above 3,000, that's going to tell us that there's a short-term bottom that is filled perfectly, and that was right at 2 standard deviations from the high. Anything below that 2960 level sets up 2840 on the downside. So remember, these markets are swinging 1,800 points on certain days. You do not want to be on the opposite side of it. Try to be on the right side of the market. That's the easiest way to be. How do you do that? Is you pays your money and you take your choice. It might take you 2 or 3 chances to get in the right way, but at least you don't have to risk an arm and a leg. That's the main thing. We're right at the 382 again in the NASDAQ here at 95.52. I don't recommend anybody trading the NASDAQ because it's basically 5 stocks, and they can move those stocks around so quickly that you can hardly shake a stick at it when it happens, almost like a magic wand. The S&P September's trading at 29.84. That's 15 handles from where the key breakout level is at 3,000. If we do that, it tells us we're most probably in a little bit more of a rally phase. But remember, folks, at one time last night we were down 1,000 points in the S&P, and we've come back from that, which is pretty good in itself. To come back 60 handles is telling if there's people buying it. But this is magic time early in the morning. The opening part of the day is usually the worst time to do your trading, and usually when it's rallying into these times, this is the time where it probably has a tendency to back off. So those are my 2 cents worth. And as I said before, if you paid for it more than 2 cents, you overpaid. Now, we're coming to the end of the show here, so be safe and be careful, and also take care of folks that really need help during this time, because we do live in very interesting times here, and we certainly want to protect the elderly. Raise your hand, Larry. I'm one of them. 877-927-6648. We'll catch you on the flip side tomorrow, boys and girls.